Hello, everyone. My name is Igor Tomic, and today we're conducting interviews on Money20. And I'm pleased to introduce Phoebe Wallis, who is the Chief Revenue Officer at Griffin Bank. Hello, Phoebe. How are you?
I'm good, thank you. How are you?
I'm great. And to jump into the discussion, I'm pretty personally interested in your history because you have really interesting story for having different positions, and it's from the law EBRD, and then you ended up as a Chief Revenue Officer for the banking as a service functionality. So tell us your story. How you did get here?
I guess I don't like making anything easy for myself.
Okay.
But I started off in law. Being a lawyer is a fascinating job, and it's a lot of grit. There's a lot of analytical thinking. It's very thorough. It's very heavy on attention to detail, but a lot of the time you're not at the forefront of what's going on. And I really like to get into the weeds of things, but I wanted to be in the conversations. I wanted to understand how the products were designed. So I moved to EBRD and I worked in the capital market development team. We did a lot of work through Central and Eastern Europe and Central Asia, kind of building out or removing the reliance on bank fundings. Because if there is a global financial crisis, you find that SMEs are hit really, really hard in any region with a local currency, because banks are not usually from the region. They'll have German parents or Nordic parents, and then they will retreat. The dollar gets stronger, and the funding disappears. And you have all of these great, really innovative, amazing businesses, but there's no funding for them. We worked a lot with listing regimes, debt issuance, mini bond issuance to try and build out a bit more sustainability, but also fund these really interesting companies that range from cosmetics to forestry to new financial institutions and how they'd work, to fund them and make sure that they kind of got to market and they had the support they needed. That was fascinating. Working at EBRD is really, really fun, but you weren't at the cutting edge of technology, and I'm not very patient. So I ended up moving to Liberis in a chief of staff role. It's an embedded lender. I was doing debt capital markets. There was a bit more of a theme between those two moves. I loved it. I spent 18 months there working on their expansion across the world, their fundraisers, and kind of that next stage of the business. And I also, Rob, the then CEO of Liberis, was an early pioneer of real embedded finance. It was embedded lending, but he had conviction that the partnership model would work. And it was how you could reach more SMEs and kind of push better outcome for them. So I loved doing that. I did that for 18 months, and I was approached by David, the CEO of Griffin, for a recruiter. Initially, I was very much this isn't real. This is two men starting a bank. There's a 5-line job description, but I was employee number 5 or 6. We were in a tiny, tiny office in the beginning of 2020, and we decided that we would build a bank, and we went the hard way. So we spent 2 years designing, getting our application together. It was during COVID, so what had been quite a quick timeline was then lengthened out because the Bank of England quite rightly decided to make it a little bit harder to become a bank during a pandemic, which is fair. So we spent 2 years kind of designing, putting the application together, working out how the capital and liquidity treatment would be analysed, another year in kind of consultation, and then a year of mobilization, and we went to market in 2024, had very broad roles for the first 3 years of this, kind of chief of staff and then strategy and ops, just working out how we made a bank. And when it came to selling it, that's when I moved into sales, because I'd spent so much time working out the minutiae, a lot of which has now been proved wrong.
But that's the best way to learn, to execute and see the results.
And as we've scaled and kind of moved into having, so we have 60 customers now. We have just under 300,000 nested customers who are on our balance sheet and transacting and doing things. And I took the CRO role just over a year ago to kind of bring us into the next phase. And it's been really fun, exhausting, but fun. I don't think I ever sat down and was I will be a sales guru. I'm quite analytical. I really like to get into the meat of our customers' business models. And then work out how we can help them and create value. Because I think the other thing you have to be willing to do when you're building something is put your hands up and say, hey, we're not going to be additive. We can either transform your business or we're not for you. And it's the same ethos I have for my team. My team have got a variety of backgrounds. Some are from credit funds, some are from lenders, some are just from BaaS players. It's a real mix, but all of them are hugely, hugely curious and very forensic as we're looking at what our customers and prospects want to do, are doing, and how we can make it better for them, or how we can support new products coming into market. And we'll come on to this later, but embedded banking, kind of, you're like, oh, okay, you've got payments institutions, you've got people with investment permissions, but it's actually much wider. We have construction. It's a construction sector and like a huge product set built out around that, which I've never have kind of backed as we were designing Griffin. And so you have to be willing to become like an armchair expert in like construction financing and trust agreements, or, you know, there are the more obvious options that we work with lots of payments companies, FX, remittance, but we also have some left of field stuff. So having a team who are really curious and really willing to get into the weeds makes it much easier to sell.
That's a perfect story to describe fintech, because usually you come in from the fin perspective and then you kind of add in the tech part. So that's definitely great. And I think the money is the blood of economy. That's why it touches everywhere. So sometimes you're not even assuming that there is a need for that. So thank you for sharing that. And with embedded banking, I think, like, if you go back 5 years to Money20, everyone is talking about that, even without the proper definition what it is. So what do you think? Is it still a niche, and how actually embedded banking work in 2026?
It's a great question. I think you go back to 2020, 2021, there was the Andreessen Horowitz article, every company will be a fintech. I'm not sure that's quite true. And I think that embedded banking had a lot of hype, and it was lots of like, whoa, it's this really cool layer. It has existed for a long time. Yeah. It just hasn't existed. And I'm talking like way back when, you have supermarket banks in places, you have insurance, you have lots of financial services that are funneled through different avenues and pathways. And I think that the hype was real. The sector's been tumultuous, but she said money is the lifeblood of the economy, and it doesn't just exist within financial services firms. So embedded banking, what does it mean? It's simply facilitating payments, accounts, flows of funds, cards into places where it's really needed. Or you have a captive and loyal customer base who trust you, and you want to be able to kind of bring them the full product suite. And as I've mentioned, like, we work across sectors. And if you look at the other people here, you have Moonrise, you have LHV, you have Clearbank, Modular. Everyone is working in like really interesting pockets because you need payments, you need ways for people to store value, you need ways for people to access finance. Obviously, we work with payment institutions where you have FX firms, you have neobanks, you'll have prepaid card firms. That's all very obvious. But the other thing you have is we work with Marqeta and Uber on the Uber Pro card, where drivers can get paid quicker with a bank account that earns them good interest and gives Uber and its drivers a better experience, because they're not waiting on like a 5-day window to make sure they get paid down. It's better financial health for the drivers, but it also kind of gives Uber all of that insights into how their drivers behave, how their rides behave, what people actually need. And I think contextually, when you're close to a problem, you can solve it by providing the product yourself with someone like Griffin behind it. We have a customer called Sable who work with large kind of development projects in the UK, where you'll have a lender and a housing developer, and then you'll have every supplier they use on the other side. Reconciliation is hard in any industry, but you find there's a real payment lag. So we've created a structure of trust accounts for programmatic payments, which means everyone gets paid on time. And no matter how small or big you are, you're getting the same outcome. And that's the kind of buyers we're looking at now. We're about to move into a very different window where there's a huge amount of new technology, and we've been talking about this a lot at Griffin. We're kind of bracing ourselves for the next wave, but no one's quite sure what that looks like. We're looking at agentic payments. We're seeing the flows. We know that there is accounts and there's card rails and there's bank-to-bank payments you need to pull into it. But I feel like this is the very, very beginning of something.
That's definitely just a feeling that the market is going to be reshaped, but no one quite knows what exactly is going to be reshaped. So that's a hard bet, and I think understanding what are the markers to see and make a decision on top, that's really, really hard. So I definitely with you with that.
And you have to be open and flexible. People are going to come to you with crazy ideas, and you've got to back them, because we might all be paying with our fingerprints.
I think it's kind of unusual story if you take a look on the market to become a regulated bank from the scratch and not rely on the partners. Do you think it's reshaped or make the path different from Griffin
When
Bank?
we came into it, we could have gone down the EMI path, and you can work with loads of banks as an EMI. You can have a full panel, but what you don't have yourself and what you don't give your customer is the full control of the funds and that resilience and that stability. There is no kind of owning that entire journey, making sure that the deposits were on our balance sheet was really important to us, because if you think about the standard you're held to as a bank as well, there's a much higher standard of security, resilience, and culture and behavior. So I think it was really important for us to capture the whole piece. And I think the other really important part of it is lending. Lending fuels the economy. If you're bringing on all of these deposits, you can deploy them in a really powerful way. So we're not lending yet, we will be, but it's a big part of our story. And it's one of the core tenets of being a bank. If we were going to do it, we were going to go all in. If I look back now to my 2020 self, where I was like, we're going to get this license in 18 months and we'll be laughing, that was perhaps slightly misguided.
That was the times, I think, all the development with the Monzo, Starling, Revolut, it's kind of inspired everyone because like, yeah, we can actually get the things doing. The same were for us with the dozens, because we were developing the MEI bank back then, and everything was like, seems to be, yeah, you just can do it.
You could just run at it. Yeah. I'm really glad I did it. It's the kind of thing that you'll never regret doing. And I'm sure the amount of people I've bored at dinner parties over the past 6 years about building a bank have loved it too. But I think it was the right way for us to go, and it's how we wanted the product to work. We also built everything ourselves as well. So Griffin built its own core, all of its services. And with that in mind, like having the bank license was also really important. So yeah, that was choice. Never do things the easy way.
Yeah. Thank you so much for your time, answers, and all the efforts building another amazing financial institution. Thank you for that.
Thank you.